Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, first trading day of 2017, and the S&P 500 had a higher open, and in my opinion, that higher open came due to the significant upside seen in oil, and the pullback today seen in SPY was related to oil as well, which we will look at in just a moment. But we do have a higher low and a higher high. The bulls did recover the middle Bollinger Band of 224.57, and we saw a fairly strong close into the end of the day. So we do have a couple highs here to watch. The all-time high 227, a lower high at 226.57, or 226.73 here, I should say, and now another lower high at 225.83. So we are knocking on the door of the all-time high. We came just $1.17 shy today. And if the bulls can maintain this middle Bollinger Band, they certainly should be pushed up towards that all-time high. Now, we did see normal healthy consolidation and a bearish break to end 2016, but we can't lose sight of the overall trend, which certainly is still bullish. So we are in a bit of limbo in terms of determining, okay, are the bulls ready to step back in here? Are the bears done consolidating for the short term? Or is this just another lower high and we're going to head back down towards those recent lows of 222.73? And this middle Bollinger Band this week is going to be very telling with regard to that. The weekly time frame, still very bullish, normal, healthy consolidation, decreasing volume. Obviously, the holiday and shortened weeks has something to do with that, but nowhere near changing this uptrend for the bulls. We would have to break 217.87 to even consider the change in trend, which is currently all bullish. So looking at the 5-minute time frame for the S&P 500 here, and let's zoom in. So we saw that bullish action pre-market, and we saw a bullish push. Actually, I want to zoom out. The low of consolidation on pre-market here was 224.70, and I'll always look. I don't really pay attention to the first candlestick when things start trading very early in the morning. This is 4 a.m. And I'll look at consolidation after that, and then, of course, I'll disregard this fluke candlestick. That didn't occur because you can tell by the volume there was nowhere near enough volume to make that move in price. So the low of pre-market was 224.70, and it occurred right here. Then we opened the day, and the low on the pullback was 224.71. We held that support by a penny, and then look at the bullish reaction for the 15 minutes that followed that level. So we now know 224.70 is very important support because it's the low of pre-market consolidation, and it's the low of the day. So as soon as we break that level, the bears take control. We might be saying, okay, we had a very bullish push. Why in the world is SPY completely turning things around and giving all those gains back? If you've been following these videos, you know we watched the correlation between oil and the S&P 500. Look when oil topped out here. There's that bullish action that led to the higher open in the S&P 500. At about 10:15 a.m. Eastern, we saw oil dump, and it was a big-time dump. And the SPY bulls are really fortunate that we only gave back as much as we did, because if it were a more direct correlation, the S&P 500 would have dumped significantly. But the timing was the exact same. 10:15 was the high of the S&P 500, And then we saw bearish action for the next couple of hours, correlating with that bearish action in oil. So it is absolutely worth watching oil, because otherwise you might be scratching your head wondering, why did the bulls give this up? They had a lot of strength and we were approaching the all-time high. So watching the hourly time frame, we know what levels to be watching tomorrow. Look at the rejection, the high of the day, 2 candlesticks unable to close above the 200-hour moving average resistance. And then look at this 20-period support. 1, 2, 3, 4 candlesticks holding it. The range got tighter and tighter. We had a bullish break of the inside candlestick to the upside, and nice follow through at the end of the day for those bulls. So tomorrow I'm going to be watching the 20-period hourly support, which is going to change by then, and the 200-period hourly resistance as those ranges tighten. And that should give us a clear break of the range that we saw today and tell us which direction we need to be looking in tomorrow. So that's what we've got on tap for tomorrow. Bulls overall victorious on the day, and we'll see if that carries over and if they are able to maintain the middle Bollinger Band support on the daily time frame. I appreciate you watching. Best of luck in the new year, and I'll see you soon.